How's it going, guys? Nathan here and welcome to my YouTube channel, The Daily Nate. So in this video, we're going to be talking about 4 different ways to invest your first $1,000. We all understand that when it comes to the rat race, we're all working, we're all going to work and we all receive a paycheck. But that paycheck pretty much is being used to spend on all these random things that we think we want. But it's not necessarily the way to actually escape that vicious cycle of working and spending. So that's why I wanted to create this video, because a lot of people want to save and a lot of people do have a savings, but they don't generally know where the best area to spend that initial money is. Now, going through certain areas that I've found beneficial to myself to receive your best bang for buck, I hope that people can actually go through, and whether you're 20 years old and just starting, or whether you're 55 years old and basically about to retire, there's definitely going to be some knowledge that is actually going to help you in the long run. Now, people expect that when you go and see these types of videos, every single person that dabbles in personal finance is obviously going to give their take. And I am no different. But you're obviously going to hear a lot of people say, throw the money into a savings account because that's the best way to invest. But your savings account is probably the slowest way and over time, not the smartest way to actually put your money. And especially if you've only got $1,000, it's definitely not going to be helpful. So for example, if you did have a savings account and you put your $1,000 in, you're going to receive up to 2% interest. And over that 1 year that you've had it in there, you're going to have $20. You can have $20, so you'll have $1,020. But the problem with that is that the interest rate of the savings account is actually moving slower than our inflation rate, which is pretty much the rising cost of the Australian dollar. Now, this generally means that over time, over the number of years, your money is actually slowly losing value because the inflation rate is actually higher than the rate of interest you're receiving from your savings account. So instead of that, we're going to go through 4 different other ways that you can actually invest that first $1,000. Ways that I find can be better and most likely are better over time. Number 1, pay off your debt. So what I want you to do is actually grab a piece of paper and go through your finances. Find out what debt you currently have, whether it could be a car loan, could be a house mortgage, it could be a bunch of credit card debt that you're trying to sweep under the rug. And if that was you, you would be absolutely crazy to hold that amount of debt. And that's why it probably is the best bang for buck to use that money and pay off the debt immediately. So with that first $1,000, look through if you have any type of credit card debt and just go through it, pay it down, because ideally every single time that you're paying off your credit card debt, and it generally can be the most amount of interest that you would be paying on any debt, usually about 20 to 25% of your credit card debt is incurred on interest, and that will 100% compound on itself extremely fast. So ideally, we know that a house loan is one of those type of things where you will be paying it off a very long period of time. But even if you can actually increase the amount that you want to be putting into your home loan, you can knock off 5 to 10 years by even just increasing the fortnightly payments by $100. So ideally, the very first one that I obviously wanted to talk about is paying down your debt, because you're obviously going to receive the best rate of return if your interest rate is 20%. And by doing that and by getting rid of that, you're immediately almost making a 20% gain, which is most likely more than you will ever make anywhere else. Number 2, investing in the stock market. Now, once again, with your first $1,000, you can't expect to be making millions of dollars within the next few years. It's only $1,000, but what it does is it's actually going to allow you to take that next step and educate yourself in investing in another platform that's going to be a really big money driver in the later years as you continually invest further and further. But it all starts with that single step. The problem that comes with it though is that every single person is going to tell you, don't put your money into the stock market, you're going to lose it straight away. You're going to see all these news articles of billions of dollars wiped from the market, or certain people saying that it's going to crash further and further. And the reason for that is that with the stock market, you are going to see the price of every single stock hourly and daily, so that all those numbers are always going to be in front of your mind. And when you see something so often, you're obviously going to have the emotional mood swings that come with the stock market. But I'd like to tell you that over the last 50, 100 years, it has had a very stable rate of return of 8 to 10%. For example, if you put your money in the stock market 50 years ago, you would have had a stable 10% return year on year, compounding on itself. And essentially, we all know that when it comes to compound interest, after the 30 years is where the magic happens. So now you only do have $1,000, so your options kind of are limited. So there are two different ways of investing. There's passive investing and then there's active investing. I think when it comes to starting out, active investing, where you actually go into individual businesses and actually invest in them, might not be the route you want to take, because realistically, you've only got $1,000 and the brokerage fees are going to eat you alive as you're trying to invest really small amounts into different businesses. So the actual path that I'd like you to take is the passive route. And we all know that as basically tracking the index. So what we do is essentially we're going to invest in commonly known ETFs. And what those ETFs do is it's basically a fund that is going to help you track the market. So for example, if we wanted to track the top 200 businesses in Australia, we would be looking at Vanguard's VAS. Or essentially we could go with another one, which is the BetaShares A200. By investing in those type of ETFs, all you're going to be doing is just tracking the market. It's an extremely passive way of investing, but with your first $1,000, it's going to pretty much be your entry point into the stock market. And as you get better and you learn more, you invest your time into building your education, you can go the active route, which essentially is what you're trying to do, is beat the market by investing in businesses that allow you to reach a rate of return of above 10%. So you want to pretty much beat the stock market year on year. So I definitely think that investing in the stock market is obviously going to pay its dividends when it comes to investing your first $1,000, because it's not only a one-off drop, but you're obviously going to build on that knowledge. And as you do, you're going to find another drive to continually save that money and invest it into the stock market as you develop your understanding. Number 3, starting your own passion project. Now, before everyone comes to me and says that starting your own business is extremely hard, you're not going to do it, or $1,000 is way too little of an investment to actually do so, I just want to tell you that we are in different times. We're in an area where technology is so readily available to us. Ways of advertisement is now a lot more free compared to where it was, where to start a business required you to have $20,000 to chuck your name on a billboard. We have different types of avenues of TikTok, Facebook, Instagram, areas where you can actually express yourself. And whether you want to maybe start a cooking blog, you're really passionate in cooking, or you're really passionate in a topic that you've always been afraid to share. We're fortunate to be in a world now where we are so readily available to all these different channels where we can actually express ourselves, whether it might be TikTok, Instagram, Facebook, all of those areas where you can now express a passion that you've always been hiding and eventually turn it into a bit of a project. And once again, move that project into a full-fledging business. So for example, here I am on YouTube talking about personal finance on my phone. If that doesn't come down to starting a passion project, I'd have really no idea what is. But when it comes to starting a business, it's often going to pay the biggest return over time. Obviously not within the first year or two, generally as you keep building it and building it. Once you've actually started bringing in some income, it's obviously going to bring you the highest rate of return in terms of total satisfaction, giving you an option to actually bring in another additional source of income that once again can then be saved further. So obviously, if you can't make any more money from your day job, you have to look elsewhere. And starting that passion project is most probably going to be the next best bet in actually increasing your bottom line income. And number 4, investing in yourself. Now, once again, it does sound silly, but you are the driver of everything that happens to you in life. Whether you turn left, whether you turn right, you have to make that decision. And essentially, when it comes to investing in yourself, you want to make sure that you are in the best possible state to be doing all of those things. So before you can even invest in the stock market, you obviously have to learn about the stock market. So what are you going to do? You're going to invest in yourself to actually read certain books, watch certain YouTube channels, follow certain people that are currently where you want to be. And by doing so, you're going to take that first $1,000 and input that right back into yourself. Because by investing in yourself, what you're doing is you're actually building new skills and learning new things that's actually going to help drive your growth so much further than if you tried to go into everything blind. Obviously, all of those people that have invested into the stock market or even tried to start a business with absolutely no idea of what they're doing, no idea of what it takes to start a business, or the taxes, or the numbers, what it takes to build a team, those are the people that are going to struggle the hardest. Now, you don't want to spend too much time learning. You obviously want to take action, but you want to take it in steps. You want to learn a little bit, try a bit, learn a bit, try a bit more. And eventually you reach a point where 1 year from now, you are a completely different person. Now, once again, investing in yourself doesn't just have to be reading books or watching YouTube channels. It could actually be dealing with your physical or your emotional state. So whether you're feeling burnt out from work, booking that massage once a week or once a month to actually give yourself a refresh every single time. Or if you're feeling really lagged and you haven't been exercising, go to the gym, invest in a gym membership that you're going to then put in the time to get better. All of those things, when built together, is going to build a brand new you. And that's probably one of the best investments I've ever made myself. 1 year ago, 2 years ago, completely different person to where I am now. And it's all the things that I've done to actually learn to build the building blocks to create a better me. So to recap, number 1 is paying off any debt that you have. Number 2 is investing into the stock market. Number 3 is actually starting that passion project that you've always wanted to start. And number 4 is investing in yourself. Those are the 4 ways that I find is actually going to take you the furthest from your first $1,000 and over time go further and further for you in the long run. So I hope you've enjoyed this video, and if you've already tried one of those things or are currently in the process, that's absolutely amazing, and definitely comment down below into what you've done. So once again, this is a passion project for me, so if you have enjoyed this, make sure to like the video and subscribe to the channel. I'd be forever grateful. But in the end, let's continue growing.